Laura Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hi, everyone. Let me just remove this. Hello, everyone. Good morning. Good morning. First, I'd like to do a sound check. Thanks for joining me. I'm Kathy Lean. If you can hear my voice and everything's coming up clearly, please give me a wave, say hello. Let me know that everything is working properly. I'm looking at my other screen. It looks to me that everything is good to go. Great. Lewis says he already has his trading plan today. Share with us, Lewis, what is your trading plan today? I, have pretty much have my trading plan as well, which I'll share with you. But at the end of the day, for our BK traders, we're already up 128 pips, I think, for the week. Trading Zip the way it should be. We normally, with Zip, we do not incorporate news trading because Zip is about trading the Asia session and the New York session and looking for setups, on that front. And the news trades like non-farm payrolls, inflation that we trade with you, the Fed meeting, that is more, just for fun, for illustrative purposes, because Zip itself, my trading strategy, does not trade news. So we are done with our regular FX trades for the week. We're up more than 120 pips, and our target is 100 pips a week. If you joined me last year, I talked about how we had not had a losing month in 18 months, slow and steady with the Zip strategy following our trading rules. Now, this morning, we are trading non-farm payrolls. And, a large part of trading news well is about being able to develop a trading strategy. And we have to execute it quickly when the news comes out because we want to be able to have a plan and trade that plan. So that's what we're going to do. Now, in order to establish that plan, we have to talk about what is expected in the market, and most importantly, what is priced in. So first of all, for those of you that just joined me, let me know what you are trading, Forex, indices, or gold, because that's going to affect what I talk about and what we look at as well. So let me know, what do you trade? Do you trade Forex like me? Do you trade gold like Boris? Do you trade NASDAQ like Boris? Parker trades gold. I can't pronounce his name. Aaron Nightwee trades Forex, gold, euro, FX. Okay. So this is the way today is going to work. And this is for those of you that are new to live trading with us. So we create a plan, we execute the plan in Forex first. So my expertise is Forex. And then Boris will come in, he'll trade gold, S&P, ES, and NASDAQ. So we will be trading it all. We'll be talking about it all. But the Forex trades come first, followed by the gold and indices trade. And that will all happen after the release, not before the release. Because with a report like non-farm payrolls, we always trade it what I call reactively and not proactively. We always get an after data, not before the data. All right, time is counting down. So let's start by talking about what is expected. So there are two big numbers coming out at 8:30. We've got the Canadian jobs report and the US jobs report. Oh, let me share my screen. We've got the Canadian jobs report and the US jobs report. So starting off with the most important release, which is the US jobs report, you can see that the market is looking for down here, job growth to slow from 227,000, let me see, from 227,000 down to 164,000. Now, job growth has been kind of up and down. We've had some good reports. We've had some weak reports. It's been kind of inconsistent, but still reflecting strength. And for the most part, it seems like if you see the orange line on this chart, I'm going to zoom in. There you go. If you see the orange line in the chart, that is the forecast. The blue is the actual. And you can see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's just say 9. 9 out of the last 10 months, non-farm payrolls has surprised the upside. That means that economists have underestimated non-farm payrolls 9 out of 10 times. The only time that they had overestimated non-farm payrolls was back in November, and then before that in 2022. So it seems like economists have a trend of basically under forecasting non-farm payrolls. So from that end, the fact that they've been wrong so much to the downside suggests that maybe, they're wrong again to the downside. That's just something to think about. Now, the reason why non-farm payrolls is so tricky to trade proactively is because there's so many components of the report. Aside from a non-farm payroll number, there's the unemployment rate, and there's average hourly earnings, and there's also revisions. Each one of these are important, and each one of these we have to be kind of watching closely when the number comes out, because if earnings growth slows like the market expects, and the unemployment rate, which is actually expected to hold steady, ticks up, then that's going to be a problem. That's going to be bearish for the dollar, even if non-farm payrolls comes out at 175, for example. If the unemployment rate drops to 4.1, average hourly earnings growth goes to 0.4, and NFPs is 150, that's still going to be positive for the dollar. And that is why each one of these components are just as important. And I'll elaborate more on them in a minute. But aside from that, we also have Canadian jobs report. So the US dollar is in play, the Canadian dollar is in play. Both of these currencies are in play. And so you can see also the market expects Canadian job growth to slow. They expect the Canadian unemployment rate to increase. So they're actually looking for much worse numbers from Canada than the previous period. So the market's looking for weaker numbers from Canada and weaker numbers from US. If they're absolutely right, then we may have some opportunity to sell CAD yen. But in my experience, and probably the experience of some of you, it is rare that these economists and these projections are absolutely right. And we can have a whole conversation about why these MBAs at Chase and JP Morgan and Goldman Sachs are getting it so wrong. That's a whole other conversation. We can talk about that later. But my point is they are often wrong. If they are not often wrong, then we would never have that upside surprise. So we know that the economists are expecting a weaker number. What is the market thinking? So let's look at the price action of the markets first. And this is part of preparing for the volatility ahead, Lewis, is part of preparing for what to expect. So first off, looking at the equity market, consolidation pretty much since the beginning of the year. So pretty much equity traders have no clue. They're waiting, you got a nice little, if I take away my moving averages, you got a nice little kind of consolidation, maybe downward triangle forming, but a lot of this can change depending upon the outcome of the NFP report. But it certainly looks like stock traders have no idea, and they're just waiting for the release to come out, and then that will dictate the next direction. Bond traders have a little bit more clue. And I have to admit, bond traders are usually a little bit more in tune with what they think is going to happen. And so the bond market is really important. It's telling us a couple of things. First off, they either think the number is going to be good because bond yields have continued to move upwards, and 10-year treasury yields are pretty much hovering at the highest level since since April, and pretty much the highest level since November. So bond traders think either one, it's going to be a good number, or two, most importantly, even if it's a bad number, it won't matter and won't stop the Federal Reserve from leaving interest rates unchanged at this month's meeting. And that is one of the most important things, is what implication does this jobs report have on this month's Fed meeting. So let's take a look, and we'll talk about that as well. Gold is up. Gold is up because the dollar is down a little bit. So gold traders are a little apprehensive about the jobs report. They're a little worried that, it may not be so good. But as I said, sometimes bond traders, in my experience, are probably the most in tune with what could happen. And then the US dollar. We can see from dollar yen, the US dollar is down a little bit, but also consolidating near its high. So FX traders still also don't know, like equity traders. They really don't have a clue. They want to see the data and let the market tell them what's going to happen rather than trying to guess the clue. And with the euro, it's a similar story. Euro remains low. The dollar, for the most part, against the euro and the yen remains strong. So that tells us that, the consolidation tells us that the market is still leaning towards an upside surprise, because they saw that in 9 out of the last 10 months, and much longer than that, pretty much since April, I would say, I don't want to count it, but, at least 20 months, only one out of the last 20 months did economists overestimate job growth. So they've seen that economists are very, very wrong. And so they are keeping the dollar bid in anticipation of a strong report, or they think that even if they have, and this is so important, even if they have a weak report, it may not matter to the Fed, or they think it's not going to matter to the Fed. And they think that they're still going to just end up leaving interest rates unchanged in January. And that is what CME Fed Funds Futures tells us. CME Fed Funds Futures tells us that for the January 29th meeting, the market is pricing in a 93% chance of no change in interest rates. So the market thinks that whatever happens, this number is not going to move the needle. That the non-farm payrolls report is not going to affect. And of course, if you have joined me in the past, and I always encourage you to join me for our Monday meetings, you may know that these odds can change day by day, week to week. And they can change sometimes quite dramatically. I mean, 1 month ago, we were at 70% of no change, and they can change. But right now, the market's looking at a 93% chance of the Fed leaving interest rates under. Boris, what are you doing there? 93% chance of leaving interest rates unchanged. So, and the other thing I want to show you is that the market is also pricing in 60%, only basically a 40% chance of a March hike. And they are pricing in, we're currently at 4.25, a 50% chance of a May hike. The first interest rate cut of 2025 is not fully priced in a meaningful way until maybe June or July. So right now, July, we've got about a 75% chance of one interest rate cut by July. That needs to sink in. That means that the market has not fully discounted. I mean, basically, they're just, not really looking for the Fed to cut interest rates again in the summer, which is a pretty dramatic proposition. And a lot of the expectations, I said, can change between now and then. And it hinges on today's jobs report. It hinges also on the upcoming inflation reports and so forth. But the market does not think, based upon the price action in bonds, based upon the price action in the dollar, based upon CME futures, they do not think that today's jobs report is going to change the fact that the Fed will most likely leave interest rates unchanged this month. So with that said, let's take a look at the leading indicators for non-farm payrolls. And I made a mistake here. This says rise in jobless claims, but actually should be over here. And so we actually have 5 reasons why non-farm payrolls could surprise the upside. Number 1, service sector ISM, the jobs component, was pretty much unchanged. So still above 50, still expansionary, pretty much at the previous level, which would be more consistent with 200-something thousand job growth. 4-week jobless claims was the lowest in 8 months. And I think on Monday, I forgot when it was, we looked on Wednesday when the numbers were released with our BK members. We looked at the last time 4-week jobless claims was this low what that was in terms of non-farm payrolls growth. So I believe it was in April. And that month, April. Hold on. And that month, we had 300,000 job growth with a huge jump in job growth. So jobless claims is consistent with a relatively healthy jobs number. The UMich index, also the highest level since April, we had a drop in jobless claims. So the case for strong number is just as even as a case for a weak number. ADP was softer. ISM manufacturing jobs was softer. For the strong case, the challenger job cuts were lower. And then Conference Board consumer sentiment numbers were higher as well. So really, there's more of a case for strong number than a weak number. And we also know that from the Fed minutes, the Fed still thinks that the labor market is strong. So it is true that even if we get a weak report, unless it's 100,000 and average hourly earnings growth slows and the unemployment rate slows, that it may not move the needle much for the Fed, that it may still keep the Fed leaving interest rates unchanged in January and still sustain the dollar rally. So what does that mean for traders? What is our trading plan? Well, there's no question about it that dollar yen will be on the move. Dollar yen is going to be looking to move off of the non-farm payrolls report, and it's consolidating. It pretty much could go any way. Now, we're going to have two-pronged reaction. We're going to have an immediate reaction, which will probably be swift. And then depending upon whether it's strong or weak, we could have a reversal reaction. So taking a look here, if we have a strong NFP report, here's what I think. I think that, first off, where's my plus button? Dollar yen and dollar Swiss will be, pretty good trades here. And maybe even, short euro dollar or Aussie dollar, probably more Aussie than euro. But we have a strong NFP report. It's going to be positive dollar yen, positive dollar Swiss. And that reaction will probably hold, because the most important thing is that it reinforces what the market thinks already. So it's not like it's going to make the market second guess what they think already. The only problem here is that this move could have less legs than a weak number. If we have a weak number, what I think we will be looking at, let's say weak NFP, and this was overwhelmingly weak NFP, we will be, looking at buying euro dollar, because euro dollar has actually been unusually strong. We're looking at buying euro dollar and then selling dollar yen, and of course, CAD and CAD yen are in play depending upon what the CAD data comes out as. I also have some zip signals that I'm watching that I think will be interesting as well in here, Aussie. Hold on, let's pull that up. I know the number's coming out in less than 30 seconds, but and we'll just watch the charts. So we'll put on euro here. We'll put on dollar yen here. We'll put on dollar Swiss here. We'll put on CAD yen here. And we'll see in the price action first. But we do have zip signals in Kiwi Swiss, but we won't distract ourselves too much with that. All right. Usually with the day trades, I like 20 target, 20 stop, or an open target, and let's see where we go. So these are top euro dollar, dollar yen.
Okay, guys, I'll call out the numbers as they hit the tape here. We got about.
All right, good number. So dollar yen is it over 158.50? Oh, it's moving fast. And euro dollar, what's 158.50? See dollar yen. And see December dollar 256. Just as I said, the market underestimated it. So 158.50, we bought dollar yen. And I think euro dollar is 102, a little precarious, like 50 or so, probably going down. Remember, 158.50 is where we got in and on dollar yen. I would, it's It's really volatile. So
Canadian number is also good.
Wait, let me talk, Boris. Okay, 158.70. Our target is just hit. We sold euro dollar at 102.50 as well. And let's see how much it goes. And let's see. I think dollar Swiss could end up having a little bit of legs, but I think there's more juice to this dollar yen trade. Now, I'm not seeing the Canadian dollars. What's the Canadian dollar data?
It was 90 against 25.
So it's very strong.
Yeah.
So Canadian data is also very strong. Then we should have some continuation in CAD yen as well. With although I'm trying to look for confirmation of any full-time versus part-time work.
Full-time was 57 employment on the Canadian.
Okay, so CAD yen looks pretty good. I'm a little reluctant to pull. So forecast was 90,000. U.S. average earnings growth slowed a little bit. Canadian employment rate improved. Wow, yeah, I think 110.08, 0708 could be a good level. Let me just double check the other data from Canada. Unfortunately, they don't have as fast fingers as we do. Let's see, Canadian. So here we have average hourly earnings growth in Canada slowing. CAD jobs numbers are really, really good. U.S. average hourly earnings growth is unchanged. Unemployment rate is better. So this is a good U.S. number. Yes, so CAD yen looks good. I think CAD yen 110.07 is worth a shot. Let's see if we get a little bit of legs here. So we made some money in dollar yen. Euro dollar is pretty much flat now. I would close here 102.50. Try to sell it at a slightly higher level. Let's take a look at what Aussie dollar is doing. So we'll give it a second. I'm going to watch it on my other screen here and see if we have any sort of movement. But yeah, I think, euro dollar and Aussie dollar could continue to move lower. Aussie is definitely weaker. 61.52, 53 looks like it could move lower. So this number, what is it doing to stock futures, Boris?
Killed. Equities, gold, all getting crushed. We're going to wait. Obviously, negative risk. I think it's going to be the typical thing of negative risk early, and then it's actually positive. If you think about this, it's negative because interest rates are not going to go down any further, but it's actually very positive because the economy grows, and ultimately, I think equity is going to recover. So we're going to trade the reversal trade when it shows.
Is also moving lower. If you sold euro at 102.50, it's almost going to hit the 20-point target. Aussie 61.53, which was the level we just said. I think it was 61.53 was the short level. All right, so euro dollar plus 20, dollar yen plus 20. CAD yen's not doing anything. I don't really like this right now. This is plus 10 already. The thing is that Aussie dollar, I'm going to close it here at plus 10 because Aussie is so deeply oversold. This may be a new low for Aussie. I'm not going to flip charts right now, but this may be a new low for Aussie. So I would just take the 10 profit here. I also think euro is probably going to 102. Ultimately, I think euro is going to parity. Next Saturday, we're doing, Boris, if you don't mind posting in the top 10 trades of 2025. And one of my calls is going to be euro to parity. So make sure you register for that. It's a free event, but it's not going to be streamed on YouTube. It's just going to be a webinar. So Boris, if you don't mind popping in that, wonderful. Make sure you register for that. So yeah, we made money, 20 pips in dollar yen, 20 pips in euro dollar. Aussie dollar, 10 pips, CAD yen not really doing anything. And I think that's because dollar CAD is weakening so much. I would just exit CAD yen at 110.06. And for me, I think we have some really good trades. I think it's 50 pips here in FX. I think there's continuation. We can take a look at how good or bad the data is. So reassessing the data. Full-time employment in Canada was very good. And unfortunately, I didn't get a chance to show you the Canadian data because our time was running out. But IVPMI is what I use as a leading indicator for Canadian jobs. And the IVPMI employment index Like we watched the service sector employment index rose from 54.6 to 55.3. That means that jobs were added at a faster pace in December, even though the IVPMI index, actually the IVPMI index improved. So even though economists were looking for a weaker number, the IVPMI told us it could be stronger. And, the data doesn't lie. These leading indicators, which I talk about a lot to our BK traders, is very important because it telegraphed this huge upside surprise in job growth in Canada as well. So the Canadian jobs were really good. The unemployment rate in the US was good. Average hourly earnings growth slowed as expected. Non-farm payrolls was good. Participation rate and average hourly earnings year over year wasn't great, but still, all of this means that the Fed is going to leave interest rates unchanged next month. And this month, they're going to leave interest rates unchanged. The dollar is still bid. I think that there's still going to be opportunity. And one of the trades I had that I said we had a zip is Kiwi Swiss. I think this one will continue to work. Kiwi Swiss to the downside, 50.94. That's something that I am watching quite closely. And I also think that Euro is going to remain a sell on rallies. Dollar yen, dollar Swiss is going to remain a buy on dips. Let me take a look at the dollar Swiss chart real quick. Yeah, I mean, dollar Swiss has a lot more room. So, we had a plan. We traded our plan. We should have jumped right into Aussie. We were looking at with strong NFPs, dollar yen, Aussie dollar, even dollar Swiss worked out. That's okay. We can't be trading everything. It's retracing. And so when it retraces like dollar yen, I still think, it's like we use our shorter term moving averages to see, where it could go. And it still looks really bullish to me. And euro dollar looks like it could flame out right underneath here at 102.45. But, I gave you 4 trades. 3 of them worked out. CAD yen's pretty much flat right now. I would be off on CAD yen. And I'd be looking to sell euro on rallies, and buy the dollar yen on dips. In terms of how much of a rally for euro dollar, I don't think it's going to rally much, honestly. I think at this 102.50 region, 40-something 50, probably like around 45, that would be a good region to sell for a move lower. All right, let me know. Did you like that? If you like that, give me a green heart, a thumbs up. If you made money live trading non-farm payrolls with me, give me the money face. Let's see. I'm going to paste the money face. If you made money like me, let's share with me the money face. Boris, what's going on? Do you have any questions? Boris, what's going on in gold and NASDAQ?
Gold and NASDAQ still crushing to the downside. We are getting close to a little bit of a turn here. So I may be pulling the trigger on a NASDAQ long in just a second. I'll let you know. We got about 13, 14 seconds to go on this thing. I may go long NASDAQ, but I'm just letting you guys trade FX for the time being. We're going to have so many opportunities as the day unwinds, because this is a nice volatile report. So we're going to have lots of volatility. Okay, I'm going to get long NASDAQ right now. Let's just do this. Where am I? I got to go figure out where I'm at. Okay, in at 13. We're going to try to target 33. The second tranche is going to be at 93. So I'm going to.
Do you want to show your chart?
Yeah, I'm just placing trades right now. So let me just do that. Oh, never mind. We already got. Did I get done? Hold on a second. Yeah, I think I got done. Hang on. Sorry. Let me show you my charts. Okay, so let's go MNQ. Hang on, let me make sure I have the right Tradeovate. Here we go. Yeah, so let me get bigger on the chart so you guys can really, really see it. Okay, so just kind of really, really cool. I want to show you, this is a brand new version of BK BFF Scalper. It is 1.4. Those of you who are part of BK, you have access to it. Those of you who are not, I'm happy to just post the link, because now this thing is going behind a gate. We used to have it just basically available for anybody to download, but now it's going behind a gate because it's really, really, I've said this 1,000 times, okay, it's going to laugh. This really is the final version.
I guarantee you, I could wage you money Boris, that this is not the final version.
Well, okay, let me put it this way. It's the final version as far as logic goes. It may have some more cosmetic changes, but it really doesn't.
I guarantee you that within 2 weeks, Boris will say, I will have as the brand new one of this. Him and I are so different.
It is probably the easiest bet in the business to bet on the fact that
I could not, and Boris and I could not be any more different. He will tell you, I've been trading the exact same strategy for the past 10 years. And there's really been no changes. The only change was maybe I stopped trading Mondays because I realized that it was a wash. Sometimes we make money 50% of the time, we lose money 50% of the time. It's not a good experience for anyone. So we stopped trading Mondays. But aside from that, everything has remained exactly unchanged from my trading strategy for 10 years.
Right.
So just like I've been, I like to say I'm a creature of habit. I've been married to my husband for, I don't even know what year this is, but we've been together for 20 years. And so, I'm happy the way things are. You should see the funniest thing is when, and I have a video on this, I've been learning to code with GPT, and Boris has been trying to teach me because he's the one that knows how to do this. And I'm always like, stop. I can't process more than this. This is all I need to know today. And then, tell me tomorrow what the next step is.
We could do this. Yes, it's very true. We're very, very different personality-wise. We also obviously trade very differently too. But what I was going to say is, yes, I will say this though. This is a really, really, really good version. I am so happy with how this thing is working out. So this is the 1.4. And what I wanted to show you is I've made it hopefully as visually enticing as possible. You see these little fire icons, Those are the massively oversold or overbought conditions on a 1 minute chart in NASDAQ. So this basically coincides with this distance from 8-period SMA. Whenever this gets to be 10 basis points or wider, which is 1/10 of 1%, which doesn't seem like a lot, but on a 1 minute chart, that is a massive, massive stretch away from the moving average. It tells you there's huge amount of imbalance, right? If you think about this in terms of supply and demand, this massive, massive amount of imbalance. And what is the easiest, best trade to make in markets? When there's imbalance, because when there's imbalance, things are always going to come into balance. If you think about this, like from an investing point of view, what does Warren Buffett do all day long? He buys things at a huge discount when there's massive imbalances, right? He likes to buy things super cheap when everybody is selling. He just does it on a yearly basis or a decade basis. I'm doing it on a micro basis, but the same idea in terms of market market ideas works very much. So now we have, by the way, lots and lots of overstretched conditions to the upside. And what we're looking for right now is a confirmation that we're starting to sell off that upside. So I'm actually going to go short NASDAQ as soon as this candle completes. I need to make sure that it completes.
So basically, Boris, is the confirmation the move below the indicator line or the move below the indicator line plus the red background?
It's the move indicator plus the green background to the upside and a red background. Like right now, we're looking for red background. See, it's above here, so we're looking for this thing to come down and give us a red back. So now we're going to go sell this. Okay, so we sold it at 29, and we're going to see if we can target it down to like 19. And we're always selling it obviously in tranches, right? So I'm going to I'm going to see if I can catch this to the downside right now. And if I can't, we're going to sell 49 higher, and we're going to sell 69 higher. We're going to give it 3 tranches to make this thing work its way out. So it's 29.75, 49.75, and then I want to do 69.75, and hopefully 69.75. Okay, here we go. So I've laid out all these tranches. You see the trade just really tickling my target over here. As much as I can. I want to speak to you a lot in much more detail about the money management techniques that I've worked out with this thing that really works well for me. But you can use completely different ideas. But if you like the kind of fast, there we go, and we're done. Second trade done over here. You guys hopefully saw that on the moves. And now the only thing I got to do now is very important. Get out of all the other tranches. Make sure you don't have anything on the board. And I cleaned it all out.
What I really like about this is and and a lot of what we tried to do is we try to keep the visual and we try to make things very easy to identify on the charts when you're trading, because there's a lot going on when you're trading. You're watching other markets, there's a lot of anxiety, there's a lot of eagerness to push the button. But when we kind of have visual indicators where we color code the backgrounds, you know exactly what you should be looking for, which is this is a bunch of logic, which otherwise you need a whole bunch of indicators on. But you know, all you're looking for in this example is red background below the indicator line to sell, green background above the indicator line to buy, right. And that you shouldn't be doing anything else.
Exactly. Like, not to get a little, philosophical on you, but the whole idea of information theory is that you need to compress the most complicated message in the least amount of code, right? And visualization is the way we human beings communicate. Like, in other words, we understanding the 55 different conditions behind how this works is all done, as Kathy said, in just red-green movement, right? Just like when we look at the landscape, when we were hunters, there's 1,000 different things that are going on in the field, but we see that if a antelope is running towards us, that's the only point of visualization we need. And this is the exact same idea. There's probably 500 lines of code behind all of this stuff that does a lot of if then and switching indication and so all sorts of stuff. None of which you need to worry about. And especially you don't even have a chance to worry about this because you snooze, you lose. You have to react, just like in the jungle. You have to react when either you react or you die. And the markets are very much the same.
You will never find me in the jungle. You'll never, and I will die probably if there's an animal chasing me. I told my husband that if this is zombie apocalypse, just eat me. I'm not going to survive.
But the funny thing is, it's the exact whether it's the animal in the jungle, whether you're trading, it's the same thing. You're just it's just an abstract version of the same activity. Versus it's one is mental, the other one is physical, but it's all really the same thing. And that's why, I use these metaphors because they're really very true. The human condition is the same, regardless of whether we're trading screens or, hunting antelopes in the savannah. And you need to optimize it to that most primal, basic human way of acting, because that is really how we react. We can't sit here, especially on a short-term basis, and, contemplate our navel all the time.
So plenty of people are asking about what's going on in gold. Can you take a look at it?
Yeah, I know. I mean, and the reason I haven't been able to, just because remember, the other thing about trading is you need to just focus on one instant at a time. So gold is really recovering. Gold is really, really recovering hard. Now, I want to show you another component of this chart that is really, really fascinating.
Well, can I ask you a question? Yeah. Was this a trade where the background shifted from red to green and it closed above the indicator line, the blue line?
Yeah. So right. So what I was going to let me sort of explain to you what everything that's going on over here on the gold chart with these indicators. So first of all, we had a phase transition to a deep to what likely was a downtrend, right? It went from black candles, which is sort of neutral trend, to a downtrend, right? But, and this happens occasionally, and this is where we need to be very, very mindful. Our strategy, if we were to sell this over here, this is the one example where the strategy would have failed, because this is the V-shaped spike. This is the one pattern that kills our strategy. And that happens rarely. We have to fully prepare ourselves for it. We have to have the proper stops for it, because if that happens, there's no way to repair yourself out of it. You're just going to have to eat the loss. But I mean, it's actually fascinating how I'm surprised at the fact that the gold just totally spiked out. It's actually very bullish gold. And more importantly, the way we would have traded this now is because we had a phase transition from black to red, super we call super trend to the downside, and then come right back, we would have been buyers. If I was here, I would have been completely reversed myself and bought, because that is a super bullish indication. When we do have this kind of a V-shaped recovery, it's a super bullish indication. As a matter of fact, what you're seeing, all these fireballs going off here, is the fact that the price is so soaring to the upside that it hasn't touched the 8-period moving average, the indicator line, for like already 6-7 minutes, right? Now, for those of you who are the possibility of initiating a trade, there's two things we can do here. We already, we missed these two trades. That's fine. But there's always a potential setup in the making with this new indicator. So the potential setup here is twofold. Number one, if we're big believers in trend, and I don't know why gold would be soaring so much in trend. It's fascinating to me that it completely reversed. That's a very, very bullish sign. Generally, if you don't have a fundamental explanation for something and there's a technical move for it, that's actually a doubly bullish sign, right? Because something else is going on there fundamentally that you're just not seeing. And it's so strong, the market is reversing. So my view now is I would much rather be to the long side on gold than to the short side. So if that's going to be the case, we're going to wait for the blue line to cross the red line, establish a trend, a positive trend, and then see how it goes. And then it's going to give us a green signal like something like this. And once it gives a green signal, then we can establish a long position. Conversely, if you're like, man, this is a bullshit move, I'm totally willing to sell this. Here's the really cool part about selling this with intelligence. So all of this is grossly overbought. That means nothing. That means nothing. All it tells you, the beautiful thing about the indicators, just tells you, listen, you're overbought. But now it goes red. And if you have the, if you have the cojones, or if you have the belief that this is truly corrective move, yes, now you have the visual signal to want to sell it. So I'm not going to do it because I think it probably actually will work, but I'm just, I'm not vibing the gold right now. I need to understand what's going on here. But if you wanted to wait until it's 3, 4, 2 seconds, let's see if it stays red. Okay, we'll virtually sell it. We sold it 705. The target would be 702. The second tranche would be 708. The third tranche would be 711. So we would have to go all the way out here and see if we could correct. If we would have to try to work our way out of this trend. But basically, right now, if you're a believer that this move is just completely short covering and it's going to go down further, you'd have been short 705, targeting 702. And we can see how this plays out in the next 5-10 minutes. But more importantly, the technique of knowing when to come in with the most intelligent proposition, not necessarily it's going to be a winning proposition, but at least there is a reason for why. There's no reason to be selling over here. All it's telling you is yeah, you're grossly overbought. Now there's actually, the market is showing you, yes, I'm finally willing to maybe go the other way. Then you take that signal, and that gives you so much higher probability. It doesn't give you any idea that it's always going to work, but it's going to work 8 out of 10 times, 7 out of 10 times, and that is a edge that you want to be able to exploit. So the indicator, I think, is just built now so beautifully in terms of understanding all of its potential, that I think it's much easier to use. And also, of course, the beautiful part about this, as I said, is it's built for trend traders and counter trend traders. If you're a trend trader and you're just looking at this, you're like, no, Boris, I'm not going to counter trend this. This thing is going up. It's going above the 200 period SMA, the red line. I'm going to wait for this thing to establish trend and then go trade this trend, because clearly the downtrend didn't work. It looks like we're going to go to the uptrend. And you notice that I didn't take this trade because I was, generally I'm a counter trender, but even I was like, no, this is not a really great counter trend trade. This thing is so, when you get that V-shaped recovery, that is a very, very powerful signal about a market telling you, dude, you want to be on the side where the V is, So we're going to just be a little patient here. Let this thing consolidate. I'll take a look.
Joe asks, are your transactions preset with target and stop?
Yeah,
so you're a UK trader, we always have set targets and stops. You go ahead, Boris.
Yeah, I mean, certainly for me, not only is my stuff preset, but I'm preset 3 levels deep. I know exactly my terminal stop. I know exactly my first exit. I know my second exit. I know my third. There is nothing. When you are trading with me, everything needs to be predetermined before the trade happens, because the execution is so fast that if you start there and you start, oh, maybe I'll do this, maybe I'll do it. Once you start, wallowing in thought after the trade is gone, no, everything needs to be just as Kathy says, plan your trade ahead of time. Win, lose, or draw, you will be in a much better shape because you will be executing to your plan. It's really, really important to do that. Yes. So everything is preset. I'll go through the exact presets that I use. I'll show you.
So it sounds like, a lot of you made money with us trading Forex this morning. I'm so glad to see that. fundamentals matter. And, this is how we turn fundamental trading opportunities into basically trades that we see in the markets. And the most important part is really, when it comes to trading news, a lot of people avoid trading news. But when you have a plan and you're methodical about it, and we knew that if it was a good number and it was an overwhelmingly good number, that we could just jump right in. If it was kind of mixed, we were very, very much more of a shorter movement. So, the most important part is taking the time to create a trading plan. And then as soon as the number comes out, execute that trading plan. And even with Boris, he came in a little later, but he has his indicator. That's his trading plan. And so, it's,
and my stops and targets. The other thing is you have to have a plan, and you have to have your risk. You have to have your risk plan, both your entry plan and your risk plan, all set up ahead of time. So does Kathy. Kathy knows exactly where her stops are, and she's going to target her targets, and that's very, very important.
So the Fed has told us that in many ways, inflation is more important than jobs. Next week, we have inflation from the US. We have retail sales from the US. Make sure you join us for our Monday game plan webinar at 8:45 a.m. On Monday, because next week is just going to be just as important as this week for trading. With, in many ways, a piece of data could be even more market moving. Although jobs report is market moving as well. My point is, join us to create the trading plan for the week on Monday, because this is just the trading plan for today, and we go live at 8:45 a.m. on YouTube, on X. Make sure you join me then. Otherwise, I'm going to bow out, and I'm going to leave it.
Before you go, Kate, I have one question for you. Do you have any fundamental indicator that you use on the fundamental side to kind of forecast inflation? Is there anything that that gives you?
Yeah, and you're going to come join me on Monday. And we're going to look at handicap inflation and retail sales.
Okay, so she's going to teach us.
Maybe Boris will learn something at that. But although we've been doing it the same way for years.
You want to know ahead of time what her forecast on inflation could be, which is very valuable. Because she said that's going to be there are only two reports that matter in the markets these days: jobs and inflation, right? That's all. And everything else.
I want to take a minute. Who wants to know and give me say yes in the chat box, why economists get it so wrong, and why they be paid hundreds of thousands of dollars to get their forecasts, and yet they're still so wrong with the forecasts. Who wants to know? I know JB wants to know. But only JB, I'm not giving you my answer. Okay. All right. Adrian, Howard. All right. Unplugged. Yes. I think it's a really important question. Why are these economists so wrong? Why did they underestimate NFPs? Pretty much, I think it was like 19 out of 20 months or something like that. They underestimated NFPs. Why are they getting paid the big bucks when they're so wrong? And why am I right? And the reason is because my job is so much easier. My job is to just forecast the direction, either up or down. Is it going to be stronger or is it going to be weaker? They have a much more complicated job. They have to come out with the actual number. And in doing so, they have these models that they've been using for decades that basically take in data from ADP, they take in data from lots of different companies. They take in data from other indicators and they feed it into these models. And through time, the models, sometimes they work, sometimes they don't. But what they actually have to do is they have to spit out a number. I just have to forecast direction. And in order to spit out that number, they have to have reasoning behind it. They have to show their bosses what goes into the model. And in many ways, it's a much harder job than my job, which is just forecasting direction. And so, first off, they're using these dinosaur models to forecast the data. Secondly, more importantly, I think, is that with a lot of the reports, the reason why there are revisions is because they only take whatever they have for the first 2 weeks of the month. And they use that information to extrapolate this 163,000 forecast. And then when, the second half of the month numbers come out, that's how we get revisions. So they are at a disadvantage because they're only using the first 2 months of data. And then also, they're using these dinosaur models to forecast the exact, because they have to forecast the exact number for what they think non-farm payrolls will be at. My job is I just look at what confidence is. I look jobless claims, and they have to feed all these jobless claims numbers into their model, and they have to forecast. I mean, let me see if I can take a look at like what were I already forgot. What were jobless claims in the first 2 weeks of the
I think they were actually a little higher, and then they were a little bit lower in the second 2 weeks, right? You can go to maybe
I'm trying to find that right now.
Forex Factory.
Yeah, so we're gonna do that. I'm gonna share with you my screen, and then I'm gonna say goodbye. Hold on. Okay, how do I add to my screen? I guess I'll this.
Yeah.
That's not what I want. Hold on. Stop screen. I'm gonna share with you my Forex Factory calendar. All right. So we know, because we had these two numbers by the time we had non-farm payrolls, that jobless claims were very, very low. But when they had it, they only looked at these three numbers. And so they looked at these three numbers here, which were much higher than where it was last month. So they had to input these three numbers into their models in order for, and it looked like it was much worse than what it was the last 4 weeks in the previous month. And so, so that is why they are, they're underestimating, because they were using older data, whereas we were using more recent data. And so the estimate did go up a little bit by the time we traded, because I remember it's 140 something, but not by much. And that is why they get it so wrong. Does that make sense? If it kind of makes sense to you, give me a thumbs up. Thank you, Kathy. You explained to me something I didn't know. I like to get that feedback to make sure that you guys understand, you're following along, and I'm not going too over your heads. Let me know if you understand it. No one's saying anything. Or, I mean, I know the chat's delayed.
No, they're all just watching the price action. But yeah. Anyways, the point being is K is just much faster. We actually have, let me just take my screen, just show you guys. We have a buy in S&P, which I'm going to buy right now. Buy market. I'm a little bit early. It's 28 seconds for the candle, so maybe I jumped the gun a little bit. We'll see.
All right, I'm going to say goodbye. I'm glad you guys explained it. We'll talk about it again. We can talk about it again Monday. We can explain it again Monday. Lots of time. All right.
Thanks. Thank you, Kay. Thank you so much. What a great, she did a great job trading today. Everybody give her a big hand. Thank you again. Everybody got it. All right, wonderful. I'm gonna go to single viewer screen, Kay. We're gonna bump you off. Hang on just 1 second. Let me go this way. And we're going to go this way. Okay, there we go. You can, not now. Okay. So you guys are watching my trade. I got long here at, where am I long? 906.25, targeting 10.25. So we're targeting 4 points, right? I haven't done it in my tranche levels. Let me just sort of lay out my tranche levels. So 906.25, next level would be 4 points down, which is 902.25. And the next level after that would be 98.25 if I need be. Okay, if need be. Okay. So let me explain to you a little bit about how the indicator is working right now, why I'm counter trending, blah, 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 so on and so forth. So first of all, I'm counter trending because I love to counter trend. That's number one, right? Except when I get these big V-shaped moves like we did in gold, then I stay away from the EDC. But as you can see here, one of my suspicions, as I was trying to tell you, is that even though this is knee-jerk negative for equities, it's actually long-term positive. Good growth, job growth is all about growth of the economy. That still keeps the stocks up for right now. So we have this knee-jerk sell-off, and for us, we're not really looking to forecast long-term macro movements. We're looking to find opportunities at the extremes. That's what I love to do. I love to find opportunities at the extremes because that's, I think, is where the edge lies in day trading. When things get dislocated, you have a chance to step into the dislocation and take the edge off, right? Remember, what do market makers do? There we go. And I'm done, and we're done. So now my only other job now, this is the third trade of the cycle. Just make sure we get rid of all my tranches, and we'll go again. So sort of back to my philosophy of because those of you may not notice, I've been trading for a long time. I used to, so long ago, I used to be on a market making desk for over-the-counter stocks. This is like in the 90s. And if you're in a market making desk, and then of course, I was at FXCM, and even though we were market strategists, we used to hang out with the dealers all the time. Basically, what you realize when you're if you're short-term trading, you're essentially trading with the dealers, right? Dealers make their money there's a difference between trading for income and trading for capital gain. If you are a person who's like a Warren Buffett type, I want to buy and make 100x my money, or even if you're one of those traders who say, I'm going to buy on a swing trade basis, I'm going to risk $1 to make 5 or risk $1 to make 3, you are trading for capital gains, which is fine. It's a great model, but that is not how market makers make money. People who want to make money in the market every day, when you're trading for income, you're doing the exact opposite of what the crowd does. That means, first of all, you're almost always looking to buy when everybody else is selling at the points of extreme. That not just blindly buy, but buy when everybody is done buying and they're going to go the other way, right? Number one. Number two, you're almost always trading with a completely different risk-reward structure than everybody else does. Because what you're trying to do is you're trying to win, and occasionally lose big. You are doing what's called the insurance company model, right? It may be a bad time to talk about the insurance company model given what's happening in California right now. But and one of the interesting things, by the way, I really don't want to. I don't want to tread on people's tragedy. I'm absolutely devastated. We have lots of friends in Southern California. It's terrible what's going on over there. But if we just sort of step back and try to understand what insurance companies do, insurance companies are. People think that insurance companies are in the business of paying you money. It's the exact opposite. The insurance companies are the last thing insurance companies want to do is pay you money. They're not in the business of buying risk from you. They're in the business of selling you peace of mind, right? Which is sort of a bullshit idea. But what I mean by that is the last thing, insurance is the only business where you pay money and you get nothing in return except for a promise down the road, right? And I know it's horrible, and it's just sort of very amoral at how the business is set up. But the idea is, if you're in that business, you want to delay paying out those promises in perpetuity. You never want to pay your promises. You just want to collect money from people, right? That's why insurance companies, unlike software businesses, unlike manufacturing business, have been around for 300 years. What do you think Equitable? How old is Equitable? How old is Allstate? How old is AXA? 3 companies, one of them French, one of them German, one of them American. They're 300 years old. They've been around since the days of Napoleon. Like, what you think that business has been around for 300 years because they're in the business of losing money? No, they know exactly what they're doing. So what I mean by that is insurance companies basically occasionally do get stung, but they just, of course they get stung. But generally what they try to do is they try to never take unnecessary risk. So market makers, when they trade in the market on a day-to-day basis, do the same thing. They don't try to take unnecessary risk, right? So what they want to do is they want to be buying at a point where there is a clear point of a turn. So like I bought this over here because we were grossly oversold, clear point of a turn, beautiful. Now we're getting to be grossly overbought and still in a downtrend, by the way. So if this thing starts turning red, yes, that's going to be a point where I want to come in and trade the market, because that's going to give me the highest leverage of potential. But until that point happens, I'm doing nothing. And that's the key thing to, like, good insurance companies basically never write blind risk. They never write risk where they don't feel like they have a reasonable chance of winning the transaction, right? And I bring this up because many of you may have heard James Woods talk about this yesterday. It's freaking horrible. Again, I'm not in any way, shape, or form making a moral judgment. It's a horrible thing. But he said that 4 months ago, all the insurance companies canceled all the housing policies. They just got the hell out of there. Why did they do that? Because they knew that there was just too much risk, right? That's it's horrible from from a moral point of view, but from a business point of view, it was absolutely the right decision. So unfortunately, all those people in Pacific Palisades not going to be able to collect on their insurance, but the insurance companies are going to be staying in business. Anyways, and our job here is not to be virtue warriors. Our job is to make money. And God, nobody was more mercenary than the people on the market making desk when I used to work there. The point is, you need to be in that kind of a mindset. It's a completely different. You want to be a trader or you want to be a human being. You can be a great human being off the screen. On the screen, you need to be very mercenary about your trades. It's not about you feeling good or you being virtuous. It's about you doing the right thing on the chart. So that's the riff of the day today on how I trade. Hopefully, you guys find it interesting. Let me see if anybody's got any comments on this thing. No. Somebody's saying Warren Buffett and Geico. By the way, that's a really, really good story. While we're watching the market, it's kind of a little bit quiet. What I'm waiting for right now, I'll tell you, is we're getting a pretty clear turn, right, in the marketplace. The market is still 46 basis points wide. We're still pretty wide, still pretty much in a super trend downtrend, right? So if this thing goes red, I am going to be tempted to go short here, but I'm mindful of the fact that we got 10 minutes to the market open. This thing could rip up as everybody, as everybody kind of sells the news and then buys the open. As a matter of fact, you know what? I'm probably just like the guys in Pacific Palisades. I'm going to back away from this risk. I'm not going to sell these guys the risk at this thing, even though I feel relatively okay. I don't want to be in a situation where I got to be 3 tranches deep trying to work this thing out against a V-shaped vortex on the open. If this thing dumps all the way to the bottom, mazel tov. I'll be happy to find opportunities there. The really, really cool thing about the indicator is that every 10 minutes, there's a reasonable trade to make. Whether you're a trader or a counter trader. So don't feel like you need to make a trade every single signal is not a trade. Just understand your context, understand your danger points, understand your environment. Right now, I got 15 minutes to the open. There's just massive buys or sells coming on the open. Who the fuck knows what they're going to do? I'm going to let them play the game out, and then I'll step into the price action once I have a reasonable feel for where the play is made. And if that means I'm going to miss a couple of wins, no biggie. I have the rest of the day to go with it. But the story, Warren Buffett and Geico. Here's the interesting story for everybody to appreciate. So how Warren Buffett always talks about how he buys value and he buys cigar stub companies and all that stuff is literally the biggest bullshit that you've ever heard. Because Warren Buffett made literally 90% of his whole wealth buying this really expensive stock called Geico, right? And because they were already a hot company when they bought it, they had this brilliant idea of selling insurance to government employees. It was an unbelievably lucrative market because government employees always had a job. That means they always had money. That means they always paid their insurance. They were generally not exciting people. I mean, if you're going to be working for the government, you're not exactly going to be a daredevil, right? So therefore, they were low risk, and and there was tons of them insurable. It was a Washington D.C. company, so they just made a ton of money over the years, and the stock basically became like literally 90% of their portfolio. You know how he talks about diversification and you got to be mindful of risk. All bullshit. Literally broke every rule that he ever preaches to make his whole wealth. So. When you really find out how Warren Buffett actually made his money, it's fascinating. It's basically betting on this one massive lottery stock that totally ticked. Did you figure out what's behind the V-shaped recovery in gold? No, I did not, my friend. I don't have an effing clue. Sometimes sometimes it's not very obvious. It could have been Bank of China. Could have been just a big buyer. Remember, the V-shaped, these kind of big moves. Are not necessarily a function of some fundamental news. They're a function of somebody who's got more money than you being on the opposite side of the market. And they can drive that reality really, really strongly, right? And it's, it's pretty clear that reality is, I told you. So I want, I'm just not following gold right now, because this is the other thing is, gold is my sort of secondary trade. If I start trading gold right now, all we're going to do is trade gold, and I don't want to trade gold all day long. I want to trade indices because this is jobs day, and indices is a perfect thing. So remember, I said to you, when gold goes green, it's going to be a nice long trade. It's definitely, would have been a good, but 18s. The way I would have traded this, I would have put 18s. Then my second tranche would have been 15s, which is like right over here, and I would have resolved it on the second tranche. It bounced right back up onto a resolution. I don't have a vibe on gold today. I don't understand why the fuck gold is trading the way it is. So I'm just going to stay away from it. You guys are welcome to trade it. You're welcome to use it as my indicator. It's clearly giving you lots of good signals. I just, I don't need to trade. The beautiful thing, as I said, there's 1,000 trades you can do all day long with my indicator. Do what feels best. Don't force yourself into doing something just because you have to. That's the other great thing about trading, which is completely the opposite of all the other things you've ever been taught. Don't do what you have to, do what you want to. And if you're not feeling it, don't do anything. Your life doesn't depend on you taking the next trade. It's not like a like castor oil. You don't have to, it's not like a push-up. You don't have to do your push-up. That's the other interesting thing about, I think, trading is it breaks so many normative models of behavior. You kind of have to be, a little bit insane to be a trader, or at least an insane mindset when you're trading, and change all of the normal behaviors that that we generally do. This is it. Anybody watching the show on Paramount, or it's actually on Showtime, I guess, called The Agency. It's with Richard Gere and Michael Fassbender and Jeffrey, I forgot his last name. It's about the CIA. It is so freaking good. Anybody watching The Agency? Give me a yes in the comments if you're seeing it. So the point being is why I find that fascinating is because there's like this great scene where Fassbender is with the CIA therapist, and he basically says, you have to be insane to be an agent. And then he just goes into this whole big riff about how, you have to suspend all human emotion, lie to people, to your best ones, hide all your intentions, so on and so forth, then come back and be a normal person. And I just thought, just funny, because there's a lot of truth to his observation about, being a spy to kind of also being a successful short-term trader. You have to have very different approaches to life, as you would in all other aspects of it, where we are, working hard, doing the right thing, consistency, so on and so forth. All the behavior sets that we have in normal life don't necessarily apply to trading in a way that we think they should apply. They're not transitive. They're not, they're not easily transitive. So you have to find your own vibe in there. Anyways, I'm chilling right now because we got about, where's my time? We got about 12 minutes to the open. I'm just not going to do anything until the open because I want to see how the market trades. We're clearly turning quietly to the upside. We are very close, maybe another 3-4 candles from turning from red to black, which means a trend transition, a phase transition. And are we going to go positive? Maybe. I mean, my vibe was that this is going to be a knee-jerk reaction, and ultimately we go positive. So we'll see. That's why I don't necessarily want to be shorting any of these trends right here, because I want the market to kind of tell me what it's going to do. If we kind of get up here and start diving back down, yeah, then we have chances to make some more sells. But for now, we can just as easily watch the market. We see that gold has really been the harbinger of risk, right? Gold just totally turned itself around, right? Completely gave a big FU to the sellers, and now gold is just nothing but greens for us. And as I said, even though I'm not trading it, it's just giving us really beautiful signals all the way around, right? So it's sort of fascinating. I find it really, really interesting. All right, what do we got here? So let me put up some links to my stuff. Everybody get a couple of accounts from Apex. A huge amount of savings. I think it's a 50% off, but it could be as much as 70% off. I'm not sure what the latest deal is. Regardless what it is, it's dirt cheap. And I want to tell you why why I love Apex as a prop firm for those of you guys, and I'm obviously trading Apex with you guys. It's not just the fact that, it's super easy. I love Trade Evade. It's very easy to execute, blah, 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 so on and so forth. The great thing about Apex is you can buy a lot of accounts for essentially a very, very small price. And somebody, I think it was one of the guys in my room, who has got a different handle on YouTube, said something I thought was very, very profound. He said that he always wants to go out on a positive note, that the single most important thing in trading is not winning or losing, but having the positive frame of mind. And it's really, really true. Having a positive frame of mind, having the confidence in your structure, even when things are not necessarily going well, if the market is kind of driving you crazy, is so vital, because nothing is easier than going on tilt. The market's one single function is to destabilize you, right? Is to completely make you go crazy. When you lose your shit, you have lost. That's it. You've lost. That's it. There's nothing else to do. So he basically always wants to go out on a positive trade. And one of the best ways I thought of, like, how to run the prop trading challenges and the prop trading, funding challenges, is when you have multiple accounts and you're running my trades. Let's imagine I short over here, right? And it was a wrong trade and I got stopped out. I got stopped out for a terminal stop, right? It's a big hit, right? What should I do? Typically, I would lose my shit, get really angry, get doubled up, get large size, try to fight the market and try to win the account back, right? Which is 90% of what everybody does. And it's totally normal and typical of how everybody loses their mind. But when you have multiple accounts, the really intelligent thing to do is, okay, this account goes into the penalty box. I'm just leaving this account, fresh account, fresh setup. Let's go look at NASDAQ or ES on a trend base or whatever, and you start a whole new cycle and a whole new account, and you run that for a while, and maybe 3, 4, 5, 6, 7 trades, go positive your way, and you've completely recalibrated. Now, what's happened to that other account? That other account still has a tiny little loss. I mean, you have a $2,500 loss, and the worst that if you hit a terminal stop on the sizing that I do, you've lost $400, right? And what you've done is you stopped digging the ditch. You got out of the ditch, you walked around, you started looking for a new walkway, the new yellow brick road towards money. And now you're making money in the new account. And then 2 or 3 days go by, you can go back to this account because you're now calm. And you can go try to trade this account. So you know how they talk about you should never do strategy skipping? You shouldn't skip from one strategy to the next. That's a really good idea. However, you should absolutely do account skipping. If you skip accounts, that's how you preserve all your accounts, and that's how you preserve your chances of success, both on a evaluation basis and a funding basis. That's why I love the idea of multiple accounts, which I think was kind of interesting, right? So Fred is saying, what are you saying to me, Fred? He's saying, I just got a report something regarding factors contributing to the gold move. Okay, do you want to share that with us? I'll be happy to post it if you have it. I mean, was it a big buyer? Was there some of the news on the front? I'm happy to find out. All right, we got 6 minutes to the open. I'm still just sort of hanging out, watching the markets. We did go red here. If I took this is an overbought condition. If I sold this over here at 15. Was almost a target. I could have made it, but again, I'm just being very cautious right now. As I said, I don't need to take every single trade. We already did a lot of good trades. So give me a thumbs up in the chat if you guys kind of understanding my whole idea of account skipping as a method of risk control and mind control and soul control, because I think it's a good one, and I think you would benefit from it if you do it. You can QR this code, by the way, if you're, in addition to the move here. Let me, thank you, Adrian. Thank you very much. Let me just put the code back in there. Those of you guys who are sitting on Twitter, get your ass into YouTube, please, right now, because then you get a chance to ask me questions and, also look at all my links and have a good time. So come on off X, or, stay on X, but come join us on YouTube and come subscribe to the channel. Those of you who are, listening to me, I just want you to let you know that I trade live almost every single day. I trade live Mondays after Kathy does her market forecast. So Kathy does a big market, show starting, and literally without stopping, we go into live trading. Then on Tuesday, I'm trading London session and New York session. Wednesday, I'm trading London session, New York session. Thursday, I'm trading London session, New York session. That is a 4 o'clock in the morning and a 9:30 in the morning, 2 live sessions a day. So if you subscribe to the channel, you get access to all this live trading. Now, the cool thing is I have some very, very cool new MetaTrader 5. We do MetaTrader trading in London, and we do futures trading in New York. So for those of you who are not Americans, who love to trade, CFDs, love to trade on MetaTrader, I have the tools to your heart's content. And I have a new tool that I've been working on because, Kay makes fun of me, but, all my tweaks and tinkers really come up with some beautiful stuff. So I have this one new tool that's going to be awesome. It's the extension of Flash Trade. It's going to be called the Flash Trader Dashboard, and it's going to just make trading so much easier for everybody who trades MetaTrader with me. But the other thing I was going to say is, now that I got the indicator already, we were trading just Bitcoin and gold during London. We're going to add the sexy DAXy. We're going to trade the DAX. DAX is going to be awesome as an instrument to trade on charts. And DAX really moves during London Open. So I actually think that's probably going to be, my biggest mover in addition to Bitcoin. So if you guys want to join me in London, that's a 4 o'clock New York, which is a 9 o'clock GMT or UTC. Just subscribe to the channel. You'll get the notification. Come hang out with me. Okay, you can send me an email. Or you can just, Fred, you can just summarize it and tell us in one sentence. It's always like there's always one reason for why it moves. Okay, we got 3 minutes. I'm just sort of just chilling out, waiting for the market to come in. Michelin says, yeah, he's looking forward to the DAXy, sexy DAXy. Where's this? There we go. We will be trading that. DAX is just like NASDAQ, but for the Europeans, right? It's the same idea. Anyways, I'm looking forward to it. And the new MetaTrader tool coming Tuesday, I think I'm going to have it fully ready. We're all like in the final, stages of tweaking it. It's going to be awesome. It's going to basically let you do what I'm doing here with Tradeovate, but with one button, set it all up. Just going to blow. I've already been trading it. It's just been so easy to make money in Bitcoin and gold off of it because it just completely controls all your risk factors across all the tranches. Tranche, by the way, is a very fancy French word for portion. So putting plain, simple English, I trade in 3 portions. So every trade I have has 3 portions to it, and that allows me to essentially reconcile and profit from almost every single trade cycle that I have. Okay. Peter's asking me, is it free? It will be. It's totally free if you open an account with ACAP, or if you already have an account with ACAP. You just simply need to fund money, and it'll be free. So it's, yes, really, really free. Is that the SMA indicators on my chart? Yes. How do you pronounce that name? Maisa? Where are you from, Maisa? That is a wild name. That is I don't even know how. If you're with ACAP, you need to add additional funds. Just add additional funds, and you will get it. You add additional funds. Send me a screenshot of the funds that you drop. It's basically $500. Just add $500 to your account, and you will get the indicator. Maisa, man, talk to me, my friend. How do you am I pronouncing your name correct? Where are you from? That is just a wild name. So the question is this moving averages? Yes, this is a 200 period moving average over here, and this is a 8 period moving average over here. And it's totally configurable. Everything is all configurable on the chart. All of these things, you can turn every single mode off, or I have every single mode turned on, but you can also turn them all off. So if let me just sort of show you, I can just turn everything off just for shits and giggles, and it all goes off, and say, okay, right? And then if I want to turn just, let's say, extreme, if I want to show the fires, only the fires are showing. And if I want to show a reversal signals, everything else, I'm just going to turn everything on just because I like keeping everything on. But it totally turns everything else on over here. Wait, what happened here? Why did? Oh, it's still waiting. It's just waiting. It's just rotating. There we go. It's like, what happened? Okay, we are literally 9:30. No movement as usual. Typical NFP bullshit where the market open is not doing anything. We're going to wait a little bit patiently here because obviously we absorbed a lot of flow on the news, and now they're trying to see where the opening ranges are, where people want to take it. It's still, unless we break the lows over here, my bet is that we probably kind of stabilize, but we'll see. I don't trade my opinion. I trade the price action. It cites geopolitical factors as well. Okay. Okay, coolio. Let's see what the NAS is doing. NAS is going down. Sorry, this market open always makes trading view really, really slow. So just bear with me. Okay, so here we go. Here's a cool thing. So look at this. Trading NAS is now selling off hard. It's telling us, you see how it's 15 basis points stretched away from the moving average. It's like they're puking it. They're puking it. If I was if I was just myself and not trying to be a professional person, I would put the little puke emoji over here because that's really what we used to always say on the market making desk. Are they puking the stock or puking the indicator, or puking the instrument? Because this is where you make all your money. The thing is that when we were market makers, you could step in over here because you could make bid ask and you could just totally flip it around really, really fast. When we're doing retail trading, we're not that fast, and we shouldn't stand in front of a train. So what I do, I kind of modified my market maker approach, is I'm waiting to see. I'm actually waiting to see for price to consolidate. I'm waiting to see for buyers for no more selling to happen, right? And no more selling to happen on a chart is when this price is going to go green, right? Going to go green up here. Now, what is it? 932. It looks like we're going to go green right now. Let me see if the S&P is doing it. No, the S&P not quite doing it. See, the S&P is still in the red territory. The NAS is kind of turning itself around. No, not really, not yet. And a very, very important point is to not jump the gun. You need the candle to complete. You actually need them to finish the candle and say, yeah, we're buyers. Because if they don't do that, then they're just teasing you. They're just teasing you with false trades. These are all false trades. So, the lows over here, this is the day's lows, news event lows. Is the market going to test them? Maybe, maybe we're going to puke it down to 2,100. I'm perfectly okay just hanging out. It's first 5 minutes of the day. I don't need to get involved. I'm like a guy who watches two guys, fight each other until they kind of both get exhausted, and then I'll step in and play. So let's see. Interesting. Buyers have just finally kind of decided, no, we're going to buy. Let's see what the S&P is doing. The buyers, they're trying to buy it. A lot of vol here. Oh man, where's my S&P? Now the thing is, when I see this kind of a big buy up move over here, right? That also puts a very, very cautious tone in my body, because my whole idea is I want to trade a turnaround. I don't know how much higher this is going to go. I know this is a turnaround, right? And when the turnaround is like 10 points and my whole target is 4 points, I generally back off. So I could I have gone long here? Yes, I could have. But there's just so much volatility in this first 5 minutes. Again, this is a trade that definitely could have worked. I don't need to take it. I'm much more comfortable waiting for when the volatility is a little bit slower, so that I can get myself into a better probability. Again, I don't need to insure every single crazy person out there. I just want to insure the person that's never going to collect money on me, right? That's how I think about it. And this is a little dangerous. This is a guy who is a little crazy, and he may not pay his next day's premium. So I don't want to be playing with him. And that's exactly what happens. So I'm perfectly happy to wait the first 5 minutes. Because I've gotten burnt many, many times. This is a lesson from the school of hard knocks, right? As Mike Tyson says, everybody has a plan until they get punched in the face. So I've been punched in the face too many times that I don't need to be punched in the face. I'm gonna let these guys punch each other out before I come in and step in. So right now we don't have any clean turn trades, but we are starting to stabilize a little bit. That's actually, it's impressive to me that that's sort of holding the 8 SMA here on the second candle. So if this thing kind of goes green, or maybe the next candle goes green, I'll get into it. If this is still puking to the downside, it's really a question of are they going to test the lows here? I mean, they're probing the lows, but there seems to be buyers all the way around here. If the sellers can't push it any lower, the buyers are going to take it back up. But until we see evidence of that, we don't need to get involved, And I'm choosing the S&P because the S&P is a little bit less volatile. So again, when you're trading very volatile time of the day, you don't need to trade the most, you don't need to ride the biggest Bronco. You're perfectly okay trading the whole idea is here to win. You don't need to be a hero and win on the hardest trade of the day. I want to win on the easiest trade of the day. So watching this, 45 seconds left, let's see if this stays green. 39 seconds. It's acting pretty well. Let's see. But it's still 30 seconds to go, so it's plenty of time for us to get faked out. So I'm not about to what are we trading? 30 11s, 12s. I'm going to wait patiently until the candle completes. This is a little too close for comfort. And see, they faked you out. They faked you out. You don't pull the trigger. You don't pull the trigger until it completes green. Many times I've done that where I rush the trade and then you're just eating your position, possibly even getting stopped out because this thing just becomes an avalanche. You were the sucker that fell for the last tick that was the wrong tick. Let's see. Let's see how it plays out. Gold. Everybody's talking to me about gold, guys. I love you. I'll go to gold in a minute. But as I said, I'm kind of committed to trading indices this morning. You guys are all doing great on gold. I'm sure you're using the indicator to trade gold. Wonderful. But now I'm like interested because you see like this is puking now again. Third fire. We're really, really extending away from the range. We're now testing the lows. Now it gets interesting. Now, what are we going to do? Is this going to be a bigger downtrend? We're going to have like a 1% down move before we find some stability? Great, because that's going to give me some interesting reversal trades. Anyways, this is all kind of selling off right now. It's going to take a couple of candles for this to stabilize. So I will go back to gold. Let's go look at gold. Gold gave a nice sell signal at the 31s over here, right? And you would have already been like you would have already made your money. You would have made your 3-point profit. Gold kind of really did give you a nice clean sell signal. It's also giving you now possible buy reversal signals here because you see this is all stretched out. If this goes back up above the moving average, it's probably a pretty decent buy in gold as well. But gold really did. I mean, that is. When something does the exact opposite of fundamentals in a strong way, it's literally the best signal. I remember Paul Tudor Jones saying this. It literally is the best signal. Like when you don't understand why something is doing something, that is literally the best time to trade it because somebody else knows a lot more than you, and they're driving the price because they're clearly driving the price in the face of adversity, and that means that they know something so interesting and so valuable that that they want it. So Fred, you want to summarize to me what those guys said, or is there any single reason? Was there the Bank of China buy it? I mean, there's a lot of the Russians are big buyers of gold. Everybody, I know everybody loves Bitcoin, but gold is still the reserve standard for everybody. So low, by the way, news low is 588, right? So market now is starting to really, really puke out. We certainly don't get involved in any of this. These are all fire sales. We're not going to get involved until this thing stabilizes, reverses, comes back above the 8-period moving average, gives us a green close. Then only then are we going to get involved. By the way, sort of like, I know I said to you, I didn't want to take this because it's a big volatility trade. How would I have traded this particular trade? I would have had to come in long 17, right? Come in long 17. Then my next tranche level would be, what was it? 17.25. 14.25 would be my next one. And then the next one below that would have been 10.25. Did it go down 10.25? It did not. Well, it went down to 10.25 over here. So if I bought 10.25, the stop would have been 6.25, and then the resolution would all have been at 8.25. So I would have been able to resolve it. It would have taken me 3 tranches. It would have taken me almost to the limit, and it would have been a very, very hairy trade. So I would have survived this trade. Looking at this price action, absolutely, I would have been able to survive the movement. But who needs the aggravation, right? As I said, in these type of days, we have lots and lots of opportunities. Now look at this NASDAQ. Remember I said to you, I'm going to crash to 2100. NASDAQ now breaks the lows. NASDAQ is breaking 2100 lows. And of course, those of you who are really like trading trend, like all of these trend conditions just simply really, really work. Now, by the way, NASDAQ broke the 2100 and now teasing the upside. So NASDAQ may be a trade for us. Let's watch it. It may take a couple of candles. But if it catches up to the 8-period SMA, goes green, that would be a quasi double bottom over here, and we will have a chance to trade the turn. So we'll see how that plays out. Oh, I said my name right. You're from Brunei. Wow. Isn't everybody in Brunei a trillionaire? Do you drive a gold Rolls Royce, Masa? I'm just kidding you. But the Kingdom of Brunei, I believe, is literally the wealthiest place in the world. Okay, Fred. Fred is still looking for. Keith says, "Oh, thank you, Keith. Keith, you get all the money for that. He made money with gold. Good job. So isn't it cool? Like Keith is one of my long-term members. He's got lots and lots of Apex accounts that he's passed. He's working, I don't even know how many props right now. And as I say to you guys, most of the people in my room trade much better than I do because they could just focus on trading, and me having to do a million other things, including answer to the boss lady who gets on my ass every day to do other stuff. I mean, if it was between you and I, all I would do is just be trading the screen all day long. But Kathy actually makes me work for a living. So the point being is that a lot of people in my room really, really trade much better than I do. And Keith is one of them. And I'm glad he just made money in gold with the indicator. That's what I do it for. I make it for you guys. Okay, S&P. Are we getting green? I'm just waiting for the trading view to catch up here. Interesting. Look at that. We teased it. We teased it. We toes it. What's the opposite of teased? Teased, right? 31 seconds left. Still a long time to go. Man, is this a little bit of a volatile move here? So we tested a double bottom. Is it bullshit or is it a hold? Well, the price will tell us. We got 16, 17 seconds left. Let's see what the price wants to do. I'm going to focus on the S&P just because it's a little bit less volatile right now. 8, 9 seconds. Nope, no trade. 3, 4, 2, 1. 3, 2, 1. No trade. No trade. No trade. No trade. Okay. How about the NAS? The NAS held? NAS also kind of went down, right? Yeah. All right. So a little bit more of a tease, but well, this is where it gets interesting. So this is the double bottom. So I remember I said to you, 88 was the low. Did I get this wrong? Hang on a second. Yeah, 88 is the low. We went to the 95s. So are we headed to the double bottom? Possible. Really interesting. Those of you trading trend, of course, this thing is just a one-way trade to the downside. That's working for you. Although now we've got 11 seconds left, we actually may have the first ray of sunshine over here. for any kind of a counter trend move. 954321. All right, we're going to go buy. We're in at 7. Let me show you. I'm in at 7, and I'm going to have to come back and buy 4s. Excuse me. Buy 4s on the tranche, and then buy 0. No, I got the wrong tranche. I should have been buy 3s, not buy 4s. Okay, I'm in the wrong tranche. I already made a mistake. Let me see what I got here. All right, exit. All of those. So all of that worked out. I kind of got the tranche should have been 7 3s, and I bought 4s. So I made a mistake. But it was as Yogi Berra said, I'd rather be lucky than good. It bounced right back up. So the second tranche went totally positive, and that made the whole trade positive. So I got out of the whole trade nice and positive. So yet another good move for us on the move. But you see how being effing patient, just fucking wait until you get the green zone, makes all the difference in the world. It goes from me buying falling knives to me actually making an intelligent, relatively decent high probability turn trade, right? Which is what I like to do. So anybody buy the S&P with me? Anybody trade that? No? Cool. All right, we're going back down. More selling, more volatility. It feels like they really do want to take that 88 double bottom low. So more, see more. I'm watching the more fire. Now I'm just going to wait patiently. But here's the thing. The more fire there is, like the more fires of these guys, the higher the probability that we're getting exhausted, right? That's the thing. They push it lower. You have all these selling flows. Eventually, the selling flows just get exhausted. There's no more sellers for a little while. When there's no more sellers, everybody who sells the bottom and is caught short at the bottom freaks out. And the market maker's like, oh, let's ramp it up. And they just, the bargain hunters come in, and that double whammy of like, oh shit, I sold the low and everybody's not turning it around really creates a beautiful, vortex to the upside. But you got to be patient for those conditions to show up on the chart. So right now they're not. Oh man, it's almost 10 o'clock. We're having a good time here, huh? You guys having fun? All right. Tell me this is not a really, really good version of the indicator. Tell me this is like so not, so clean and clear, right? Gold has been awesome. Everybody's been okay. I'm glad you guys are rubbing it into the fact that you guys are all making money in gold while I'm scratching it out in the S&Ps. But and by the way, here's NAS. Let's look at that. I'm just curious how volatile was the NAS. But oh my God, look at NAS. It's just really, now we're breaking the 2100. So if you bought this 2137, ooh, NAS would have been really, really volatile. So if you bought this 21, drop down to 15. Yeah, see, this is why I'm glad I didn't trade NAS. NAS would not have given us the resolution. It was just not enough to the upside, and it's really, really volatile to the downside. Just broke every tranche. Now, after this little puke job at the round number of 21,000, yes, if this goes green, I absolutely want to be interested in getting long NAS. But NAS is a beast, and you got to know, you got to know when to. You got to know when to hold them. You got to know when to fold them. All right. So all sorts of deep sell-off signals for us. Now we have to wait for a couple of minutes for price action to stabilize. See if it wants to stabilize. So Masai, are you interested? Are you enjoying the trading? Never count your money while sitting at a table, right? There'll be plenty. What is this? What's this lyric? There'll be plenty. There'll be lots of time for counting when the dealing's done, right? Is that how it goes? Something like that. A great song, man. Look at this. Yeah, so we took out now. Okay, this is interesting, guys. So remember I said to you 87 was the double bottom, right? So NASDAQ has already broke its bottom, but this one, let me just get a little tight here. We are, we're like right there. We're testing the bottom here. And contrary, what happened to me? Oh, did I just kill everything? Oh, I thought I killed everything. Sorry. I hate like the Alt H key in Mac because it like instantaneously makes me hide all my I was trying to press horizontal line with this. Where is this? Horizontal line. Oh, it's not Alt, it's the other one. It's the Op, this one. Anyways, this is the line. This is the bottom over here. So we're kind of double bottoming. Hey, it looks like we might be turning. Let's watch this. Give it a couple more candles. Maybe we turn around here. Let's see. So if we look at this from a super trend basis, big sell-off, and we stayed pretty much red the whole time, right? Oh, here we go. How many times? Was it 51 seconds? No, not enough. They're trying to pull it, but it's still not there. So now it's gonna be fascinating. We're gonna watch this. Let's see if I'm right or wrong here. The next couple of candles, there's going to be a battle between the bulls and the bears to see if they can test the lows or not. They're going to try to run it. They can't run the lows. There's no more selling. It kind of gets exhausted. Then the buyers are going to start coming in, and we start to get printing a green candle, and we start to get involved ourselves. If these guys decide to bust through this red level, then we could go another 5-10 points down. Then there's just more puke job. There's more puking left. It's not, you still got to puke a little bit more. So let's see what's going on here. See how it's testing? You see that line? It's really cool to watch that, right? Just because you really get a feel for what the price action is doing. It's literally, it's like people playing cards at the table. They're showing you their cards, right? Okay, so now they push it lower. They really pushed it lower, but how much lower? Not much lower, right? They just pressed it. They triggered the stops, but they can't push it through those stops. So let's see what happens. Now people came in as buyers, and low of the day buyers, and they're holding it over there. That's why trading extremes is so interesting, because this is really where people show their true colors. Just like in real life, people show their true colors through stress. Market prices show their true colors through stress as well. That's why I like, that's why this indicator is kind of optimized for looking at the the extreme moves during the day, and therefore gives you some opportunities to take advantage of that. Still not there, but getting close. We're getting close to the green zone. And by the way, if this goes green, doesn't mean it's going to work, but it's a much more reasonable chance that it's going to work than us trying to guess that this is a bottom, right? 31 seconds left. Let's see if they can hold it. Isaiah says gold added some profit in his account today. Is it enough to cover your Rolls Royce? I'm just kidding you, my friend. See, we're testing. But now, if they start to bulldoze this down, they might bulldoze it down to the 80s, 58, 80. You see, like everybody's testing. Let's see what happens. In the meantime, NAS, by the way, we sort of been watching S&P, but I think NAS kind of. Oh no, NAS is not. I thought NAS was bouncing. So this is a NAS low, but NAS is also basically holding around the lows, and NAS is kind of turning green. Okay, if this turns green, I'm going to just bite the bullet and go long NASDAQ, even though this is the most volatile thing in the world. But let's watch NAS. Maybe if this gives me a green, maybe they're done puking the NAS. So far, no. This is really, I think, isn't this cool, like visualization wise, for you guys to see it? Like you can totally see the narrative developing technically on the charts here, right? Let me go back to the S&P just for shits and giggles. Where's the S&P? If only TradingView was fast on painting the charts. Come on, baby. Okay, it looks like the S&P, I got 51 seconds. Let's see if the S&P gives me the ray of sunshine. I got 46 seconds. Let's wait. If this gives me a green, I'm going to go with the S&P. I don't want to tell you what's going on through my mind right now. I really am a horrible human being. I have such a potty mouth. How much will gold go? I have no idea. But it's clearly going higher, baby. Like that is such a interesting move here. Okay, I'm watching this very carefully. Let's get interested in this. Let's see 4. Let's see if it holds. Got to give it to me. If it's not, we'll wait for the next candle. No big deal. Wait for the next candle. All right, next candle pops green. It's fine. Even if this thing goes higher, I'd rather wait than run early. Let me see the NAS. NAS actually went green here. Should we take the NAS? All right, let's take the NAS. Okay. Okay. In at 43, the second tranche on NAS will be 23. Is that 43, 23? And third tranche will be at. And we're done. And I'm done on NASDAQ before I could even do my tranches. Sorry. So let me show you how that trade went. So in at 43, out of 63, and let me just get out of all my NASDAQ positions. Just get rid of all my tranches. And actually, let's go back to the S&P. The S&P, come on, paint, baby. All right, we can take. I'm going to take the S&P trade here because I wanted to take the S&P trade. So in at 90, the next S&P trade will be at 86.25. Second tranche comes in at 86.25, and the third tranche on the S&P will be at 82.25, which is below the lows. Let's see if we know where we're going. So this is my S&P trade. Relatively close to this entry. So now the target is going to be 94. My target is 94 on the S&P. Let's see if we get a little bit of a turn here. Oh, second tranche got filled. All right, I'm just going to get out here. Take my I took so second tranche got filled. It was kind of a really fast fill. the trade would have been to fill at yeah, what did I get filled at? Bought 86. Oh, and look at this. And I knew it was gonna, I was afraid. Was there a 10 o'clock news? Oh, wait, hold on. Let me get out. Exit. What am I in? Am I in Q? Oh shit. Damn it. I got clipped on NASDAQ only because I left that NASDAQ trade out there. Sorry. That was just my mistake. The NASDAQ trade got done, but I forgot to clear all my tranches. So I ate a little bit of loss on the NASDAQ. But this is a 10 o'clock print on, did I run into news here? What happened to the news here? That 5-year inflation, consumer expectations. Oh, they were very negative. Consumer sentiment was more positive. Negative for stocks in the sense that now there's even less of a chance of rates going down. So this is just again another knee-jerk reaction by equities to the downside. All right. Anyways, I got out of my S&P nicely, and now I'm just going to have to wait for the next turn trade. I still think we're going to have a really nice turn trade after this thing kind of pukes out a little bit more. All of this, the whole theme today is news is positive, but the market is reacting negatively. You know what's interesting is let's look at gold now, because I wonder if gold is going to eventually start. The gold, I was going to say, gold looks like it's going to start cracking, because this is like, market sentiment is positive, everybody getting jobs. Like the Fed is going to go, fuck you, we're not going to cut rates at all. That's got to be hurting gold. What I'm actually watching, this is interesting. Let's watch this. I'm watching for a phase transition. If gold goes from green to black, that's a phase transition from a positive move to a neutral move. That will be an interesting sell proposition for us. So might be a play here for us in gold. We'll see. Well, let's see. Meantime, we're really crunching back on the S&Ps. I'm going to go back into the S&Ps in a few minutes if it begins to turn. So I did make one huge mistake here, which my fault in terms of I was focusing on price action, and I forgot the single most important aspect of the day, which is you got to know when the news is coming out. I totally forgot that Michigan was coming out. I got very lucky, as usual. It's better to be lucky than good, but I got lucky because again I had a plan. I had all these tranches over here. I was able to trip the tranche, and then it popped right back up, and I was able to come out of it. But it's still, it's no excuse to. This was not a trade I should have taken. I should have waited for the news to clear, which is what's happening now. And now we're just really puking to the downside, gritting massively oversold. So there'll be really good opportunities for a reversal trade here in the next 10, 15 minutes once we settle down. In the meantime, I think gold is going to finally crack its shine. Let's see. If gold survives this and continues to go higher, that is just a really strong testament that there's some bullish flows here. All right, how's NAS? NAS crashing. S&P crashing too. All right, it'll take at least 2 or 3 minutes for us to stabilize. This is fresh lows. We can actually move our line to fresh lows and watch and see how it's reacting against the lows right now. This is it's helpful, right? It's helpful to anchor this stuff. All right. So the lows are around the what is this? The 57 mark. They may test the 50. They love to test, the half round numbers. We'll see, but and we're grossly overstretched. We're 22 basis points away from the moving average. Really, really stretched out. May take a couple of candles for us to come back to consolidate, for the moving average to catch up to the price action, and for the prices to sort of stabilize. What you want to see is like 3 or 4 candles where there's no fresh lows that are being made, where it just kind of plateaus. That tells you that maybe the sellers are kind of, are done, or they don't have any more power. The buyers are coming in to, to create bids. Gold holding firm, still holding the super trend in gold. Yeah, this actually would have been. You see this? This is a sell. This was a puke signal. If you bought the gold here, 21, 29, would have been a good trade. I just, again, I'm just focusing on the S&Ps today, but everybody trading gold is doing a really good job. Fred says Canada discussing retaliatory tariffs on the U.S. Yeah, we'll see what that happens. So is Mexico. John says not often you see gold and USD go up same day. Yeah, it could be. You're right. It could be tariff related, and then then gold is just acting strongly because it thinks that there's going to be a global trade war with Trump. Fresh lows on the S&P. And those of you who are trading trend, this is a really, really clean, clear trend. You want to trade what feels comfortable for you. This thing is giving you lots and lots of trend entries over here on the red zone, so you are welcome to do it. That's just not my particular strength. We're a 1% wide, 100% wide, 100 basis points wide. That is so fucking wide. That's wider than the Grand Canyon. That is really, really wide on NAS. How much are we wide on NAS? 125 wide on NAS. Like generally, when we get 1/3% wide, that's a sign of overbought, oversold conditions. This thing is just grossly wide. Wow. I mean, it looks like they want to have like a 2% down day. Jesus. Remember, Europe is leaving, right, in about half an hour. This could be a lot of Europeans selling before the weekend because they're freaking out. The Europeans always freak out on Trump much more than Americans do. So they could be thinking, oh my goodness, sacre bleu. We will not have LNG. So this feels like a lot of European panic selling right now. And then once they go away at around 10:30, 11, we could see some stabilization. But we'll see. This, as I said, the market will tell us. The cool thing that I really hope you guys are seeing is that I am not. People were yelling at me the other day that I was like forcing trades, but absolutely correctly, because I was just like, hey, let's just do trades. And they were like, no, show some discipline. And I'm actually doing that. I'm showing discipline. And today the trades are all working, right? The only loser I had was because I made a mechanical mistake. I just forgot to. I left a dangling order open. And I got out of it as soon as I could. But every other trade has just been too spec, right? So here we go. Do we get a turn here? Couple more candles. Does S&P? I think we probably wants to test the 5850, but somewhere around there, I gotta be loving. I gotta be thinking that it's gonna be a turn trade. Sandy's telling me you're so kind. Good discipline today. I think so a lot of let me do my final riff of the day. for those of you who are trading. The discipline that I'm showing today has nothing to do with my own personal discipline. I have, as you all know, I have zero impulse control, right? I have, like, I'm perpetually, oh, here we go. Do we have a buy here? What's going on here? Oh, is this thing, why is this not, oh, just like TradingView is so late in coloring. I thought we had a buy. Let me just watch this for a sec. If this is going to be a buy, I will take it, but I may be a little bit too early. Anyways, while watching this, my point is I have no impulse. I have no discipline whatsoever in anything I do. I have like very, very little personal discipline. So why am I showing a lot of discipline today? Everything has to do not with my, my own ability to conquer my own demons, which I never will. It's me creating a trading plan that is comfortable with me, with my own personality. And so I created a naturally disciplined trading plan. It has tranches, it has stops, it has targets, it has execution levels, and more importantly, it has entry criteria, right? And I'm just sticking to the entry criteria, win, lose, or draw. And what's keeping me out of the market is that the entry criteria aren't showing up. I'm not guessing my entry criteria. So literally everything is planned. When I'm going to enter, what size I'm going to enter, what are my stops and targets and all my tranches, what will I do, if I get stopped out on a terminal position. I answered every single question I possibly could in terms of scenarios. So now I'm no longer reacting on the fly. The only thing I'm doing reacting on the fly is obviously just managing my trades, which is enough, it requires enough reaction. But everything else has been pre-thought, so I don't have to create a set of discipline. It's already been pre-thought. I think that's really the only way we can trade. I know very few people who have like the presence of mind to be disciplined in the moment. You got to be disciplined before the moment. Keith says we need Tradeovate on BFF and Tradeovate. So trying to figure out if I could get the AI to write it. That's a JS file. It's a JavaScript file. We'll see. Okay, here we go. 32 seconds. Do we have a turn here? Let's see. We're going to be patient here. We've had, if you look at this, sort of like the price action for the last 10 minutes, we had these lows. Then we sort of, stayed low, but didn't have, the one final spike to the downside, but we kind of held the lows. So now is, moment of truth. New candle, still not green, right? No need for me to, I don't need to jump the gun. It's not a buy until it's green. And even then it may not be a buy, but at least it's not a signal until it's green. And now we're sort of, no man's land, changing bids and asks. Nobody really has any volume to fill either way, but they are pressing it still to the downside. So there's still a little bit of downside volume here. So everybody's watching. All right, fresh lows. I told you they really, really want that 50. So they're really pressing it hard, and all the more reason to not get involved, right? Let them run the stops. Let them do their thing before we get a chance to turn this around. See if what's going on in Twitter here for a second. Okay, getting close. Fresh candle, but we want the candle to close until until we commit to the price, to the trade. So let's see. $36 seconds. 34. $17. All right. All right. We're long in at 57. Second tranche is going to be at 53. And the third tranche will be at 49. Okay. And we're in at this price, and here's all the levels, and the target is going to be 61. Do we get the turn here? Let's get a little bit bigger for you guys on the screen so you guys can actually see all of this. Oh, it's not a webinar unless we hear the sirens. And the sirens are here. And the sirens take us to profit. Beautiful. Now, don't forget the last thing. Get rid of the fucking hanging things. This is what I did before. So, okay, come on, guys. I want some love today. Look how patient I was. Look how good I was. I really did fucking actually follow my own plan today. And look how well it worked. Just like, it's pretty simple once you follow the plan. Okay, that was good. Every trade today was a winner except the one loser where I fucked up the dangling orders, which in the overall scheme of things still did not hurt me. I'm still up on a day nicely, and it was clean and it was low risk and it was really pretty much low stress. Right? You didn't see me. I haven't dropped an F-bomb today more than twice or twice. Usually, I'm like at about 100 F-bombs by now. So hope you guys really have fun. Oh, thank you. Sandy says, good job staying with a plan. Come on, give me some claps here. Let me see some love. Thank you. Thank you very much. All right, guys. I'll see everybody. Let's make sure everybody has all the links. If you thank you, Chan. You guys are so nice. Thank you. I really appreciate it. Okay. Your checks are all in the mail. Michael's asking me an interesting question. Sorry, Michael, I didn't see that question. Have I ever worked with a lower one than 1 minute candle? I think Sandy works with a lower than 1 minute candle. There's only, this is fast enough, right? Remember, I'm trading live. You guys got to follow it. There's only so much intensity I can put on people's, stress levels. This is about as stressful as we can get. It works fine on the one. I'm sure we could go into seconds and get even faster turns on the move. But who the fuck cares? I'm not looking to win the Monaco Grand Prix here. I'm just looking to drive to the supermarket and and get there safely. That's what I mean about in the old market maker days. Yes, you would do like all sorts of ins and outs over here and manage the inventory across this whole fucking mess at microseconds, right? But I'm not a market maker anymore. I'm just a retail trader. That means I got to wait patiently until I get the full turn, and then I'm plenty of time to trade that. The whole idea here is I'm trying to design a system that anybody can trade, that you guys can trade with me with the same conditions without having to to be super fast and and all that stuff. And I think this works really, really great. Sandy says that he uses it like on a lower time frame, for sure. Yeah, you're welcome to play around with it, but my whole idea is to try to make it as user friendly as possible. That's really the key, and I think I made it really, really user friendly visually now. I think it's pretty easy to see it user friendly visually. I love the little fire icons. The fire icons just pretty much tell you everything you need to know about the possibility. And by the way, so we are just sold the fuck down, right? As we're looking here, and you see the fire icon to the upside. Well, that's telling me, if Kay is probably gonna pull me away from the screen. But if I was staying with a screen here, so probably in the next three or four minutes, this thing is going to go up and then it's going to crow back down and break the SMA. I will definitely be short. I would have definitely be short that. Well, hold on a second. This thing is gonna. I'm rushing the. It's got to stay on the screen. So yeah, okay, we're over. So fine. Now I have the signal. Now it's going to run up. It's going to exhaust itself. Maybe it's going to exhaust itself on the U of M levels, but it's going to exhaust itself somewhere, and there'll be a red move here, and it's the red move will be worth trading. It won't be much. Maybe if the red move comes in here, it could be just a double bottom move, but it'll be enough to scalp that 4 points and take some money out of it. And what I mean is, like, let's look at just sort of like the timeline. This is about an hour's worth of work, and you see this 1 cycle, 2 cycle, 3 cycles over here on this. And I was cautious in front of the opening, so I didn't trade that. So it's like 4 cycles. 15 minutes a cycle. That's in one instrument. And then if you traded NASDAQ, there's other cycles. So there's like 2 cycles here, 3 cycles here. So it's already 7 cycles that I'm doing, right? 7 cycles. And I didn't touch gold because it was just too much for me to try to talk and chew gum at the same time. But if I was trading by myself, I could have traded gold as well. So what is that? 7 cycles, 1 hour, gold would have been in there. You're talking about like 10 cycles, right? Average trade is like $30 on a micro between the 20 on the S&P and the 40 on the NAS. That's $300 in 1 hour. 10 days, you're funded. And you can go to your heart's content. That's if you just sort of trading that 1 hour thing. If you're trading for a couple of hours, there could be 20 cycles that you could be running. So that's the whole idea. You just, as I said, there's always a trade opportunity here, any given time of the day. As long as you follow the extreme signals. The extreme signals to me is like the best opportunities for all of this stuff. As long as you follow the fire. That's actually like a terrible thing to say now, but you know what I mean. Anyways, everybody in SoCal, please stay safe. Everybody across the world, have a wonderful weekend. Been a really, really good week for all of us. I love coming back after the holidays. I think we're all doing great. Next week we're back in business full time. London, New York. I'm going to showcase the new tools. Everybody have a great time. Be sure to get the accounts with Apex. If you guys want, let me just give you the link to us. If you want to trade with us, here's the link to us, and everything else is good. Let me see if there's any more comments here. Is there a good video to get a full breakdown? I'm actually going to be making a video over the weekend, Michael, for everybody, and I'll post this on YouTube. How to use my my new version of the BKBFF. So it will explain every single checkbox signal. It will explain the alerts function, and it will explain my methodology. And by the way, look, I actually look how nice it is. I married the emoji with a signal, so you know exactly which checkbox shows which emoji on the thing, which will be really, really cool, right? So hopefully it's all really, really intuitive. All right, guys, where can I get my coffee mug? We haven't made them yet. I gotta, so far it's cart coffee, baby. You can take the boy out of New York, but you can't take New York out of the boy. Everybody have a wonderful, wonderful day. Thank you again. A lot of fun. I hope you guys got out of it. I will be making the video, and otherwise I'll see everybody next week. Everybody have a great day. Over and out. Bye-bye.